Welcome to the Fun Astrology and Merriman Market Analyst Saturday Financial Podcast. I'm Thomas Miller. Thanks for joining us. It is August, and Ray is on vacation again this week. Good for him. He certainly earned it. This week's column is guest authored by Wyatt Fellows, who is the editor of the MMA Monthly Grain Cycles Report and is a farmer, so he's going to bring the farm right into your grocery store in this article. And to get us started in the review section this week, an article from Thursday, Reuters, the large spike in the Producer Price Index, the PPI, this morning, shows that inflation is coursing through the economy, even if it hasn't been felt by consumers yet. Given how benign the CPI numbers were on Tuesday, this is a most unwelcome surprise to the upside and is likely to unwind some of the optimism of a quote-unquote guaranteed rate cut next month. Let's see what Wyatt has to say about that. His comments in the weekend review. The latest iterations of the CPI and PPI reports were released this week and showed a stark contrast in the data versus market participants' expectations. The CPI showed a modest increase that was much in line with what economists expected. The data suggests that inflation is relatively stable at the consumer-based level. PPI, however, came in significantly hotter than what most analysts thought. The difference in the data raised some interesting questions about tariffs and Fed policy moving forward. For example, producers and businesses could have front-run the initial tariff announcements by the Trump administration and secured a stockpile of raw materials and products critical to their output. This would have allowed them to maintain reasonable pricing to the consumer over the last few months. But as these producers work through that inventory, the latest PPI numbers suggest a sharp rise in replacement costs. The question becomes, how soon will the bulk of these increases be passed down to the consumer? If people think things already cost more now, can you imagine the look on their faces in 6 to 12 months? This begs another question. Have large businesses and manufacturers, maybe even exporters, been shielding the consumer by eating a large portion of the price increases stemming from these tariffs? One might ask why they would even do that. Perhaps it could be that they perceive this as just short-term financial pain before a more favorable trade deal is worked out. In this case, they certainly wouldn't want to risk losing market share to a competitor by charging more. But what if a better deal doesn't come? At some point, these companies and businesses have to answer to the shareholders and investors. Lastly, can the Federal Reserve still entertain a cut to short-term interest rates in the face of a leading inflation indicator ripping higher? The CME FedWatch tool still seemed to think so, assigning a 92.6 probability of a rate cut at the September 17th meeting, following the immediate release of the PPI numbers on Thursday. But by Friday, that percentage had fallen a bit more to 84.8%. What will be interesting, though, is that we will get another look at the CPI and PPI the week before the next Fed meeting on September 10th and 11th. What if PPI continues to run hot? What if the CPI starts to creep upwards as well? How might the financial markets react to a surprise hodl by the Fed? Hold on for dear life for you Bitcoin peeps. The stock markets in the U.S. sure took the higher inflation numbers in stride, finishing the week with modest gains. The bigger story might be the fact that the Dow Jones Industrial Average made a new all-time high on Friday, negating the bearish divergence with the S&P and NASDAQ that we'd been watching over the last few weeks. Gianni will have an updated outlook for what this could mean for the stock market moving forward in the MMA Weekly Report due out this weekend. The European and Asian markets mostly followed in the footsteps of U.S. markets, with the notable outperformer being the Nikkei. It was up almost 6% for the week. In commodity land, the crude oil market ended the week about 3% lower, but it is getting late in its primary cycle and is due for a bottom soon. The $60 barrel level might start to look attractive in the not-too-distant future. Metals were fairly quiet this week, all things considered. Gold continues to grind near this year's highs, refusing to break down, and I'm happy to say that one of the best-performing commodities markets this week was soybeans. Thanks to a bullish USDA report released on Tuesday, soybeans were up over 6% at one point. This was not a complete surprise, as we have been hunting a primary cycle low in this market for the last few weeks. We even got our MMA monthly report subscribers long at the low of the day on Tuesday. In crypto land, Bitcoin and Ethereum each made new highs last week, but both experienced an aggressive reversal on Thursday, forming an outside-down price bar. This may have marked at least a major cycle top, but the overall trends are decidedly bullish in the crypto space right now. And now this week's short-term geocosmics. Ceres is generally not the first celestial body one thinks of when pondering the solar system. It is classified as the closest dwarf planet to Earth and resides in the asteroid belt located between Mars and Jupiter. Ceres is named after the Roman goddess of agriculture and the harvest, so it should not come as a shock that it exerts influence over the grain markets. After all, a statue of her likeness sits atop the Chicago Board of Trade building, which is where grain futures markets were first traded. The grain markets have been shown to mark important inflection points around the time Ceres stations retrograde or direct. This again looks to be the case with soybeans forming a primary cycle low on August 6th, just 3 trading days ahead of Ceres turning retrograde on August 11th. Corn and wheat look like they might have formed lows as well on August 12th and 14th, respectively, but they have not confirmed yet. The sharp rally in soybean prices this week was a welcome relief to many producers who will be starting the harvest in about 30 days. The grain complex as a whole has certainly not participated in this inflationary rise that many other commodity markets have had. In fact, the situation is completely opposite to what was talked about earlier, with businesses experiencing higher input costs while trying to keep the product costs passed to consumers in check. As I wandered through the cereal aisle at my local grocery store this week, I was dumbfounded to see that a box of cornflakes now costs almost $8. Admittedly, it was the family size. It should come as no surprise that the main ingredient in cornflakes is indeed corn. But here's the real kicker. With the price of corn currently languishing near 5-year lows, how should a box of cornflakes be almost 100% higher over that time? Money is being made here, but it is certainly not by the producers, of which I am one. As mentioned in a previous column I penned, this underperformance of the grain complex may be slowly shifting, with the operative word here being slowly. Since bottoming in August 2024, corn, soybeans, and wheat have been largely building a base. We may be experiencing a successful test of those 2024 lows now, right on Ceres stationing retrograde. If they can hold the line here, the coming Saturn-Neptune conjunction in February of 2026 may start to offer some much-needed relief, at least in terms of price. If you have the opportunity to support producers of locally grown food in your community, please do so. Not only are the products they offer healthier and higher in nutrients, but most work really hard to produce something of beneficial value for another human being. I'm willing to bet that most of these people do it because they genuinely care about others. And we need more of that kind of mindset in the world today. And Wyatt, a hearty amen to that. Thank you for ending that newsletter well. What's the old proverb? May you be blessed to live in interesting times, and we do. And speaking of interesting, I have an interesting weekly video for you next week, so catch that on the YouTube Fun Astrology channel, and Kristen and I will be back with podcasts all week next week. Thanks so much for listening. Have a great rest of the weekend.